employment and capital spending in China, and along with that also commodity prices higher. So actually, the monetary policies of the U.S. under Mr. Greenspan and Mr. Bernanke have been a complete disaster for the United States, but complete. But it has helped the rest of the world. The rest of the world, the emerging economies and the producers of oil and copper and iron ore, should all send a thank you note to Mr. Ben Bernanke and Mr. Greenspan that they flooded the world with liquidity, and as a result of that emerging economies, in particular the resource producers, benefited.
Now, when we look at what's happening with the economy, they've been telling us in the last year that we've had a recovery, that unemployment's only 10.2, but most of the big private institutions that use the old numbers crunching system that the government previously used, that most statisticians and economists believe is much more accurate, they say it's over 22% right now, and that we're just going to continue sliding in to a deepening, really depression for Main Street. The big banks and brokerage firms are all having record profits off all the money they've stolen through the bailouts. Can you speak to what you think the economy is going to look like and the health of the dollar and what you see unfolding?
Well, I mean, given the huge stimulus we had, and also given that the economy collapsed between September 2008 and March 2009, the figures, economically speaking, will look somewhat better in the next 3 months, because these months, January, February, March 2009, were very bad. So, I mean, maybe the economy shows signs of bottoming out and some improvement will take place even. But in general, I think that the outlook for future growth is very poor. In other words, the large deficits lead to larger government debts that keeps interest rates on long-dated securities, in other words, on long-term bonds, relatively high, and may even lead to inflation at some point. I mean, my sense is that in the last 20 years, actually, the typical household in the U.S., the median household, as they call it, has not made any progress. But who's made progress are, of course, as you said, the thieves on Wall Street. They have made a lot of progress, and government employees.
Well, that's the issue, is that government is exploding in size. Obama has spent more money in 1 year than all presidents before him combined. They're just hiring more police, more bureaucrats. That's the only sector that's growing. And they're now saying they're going to continue the spending and that they're going to raise taxes. And they are raising taxes at every level, state, federal, local, international. And that we see many UN chiefs and others saying, look, we want to end the industrialized world. Government says we're consuming too much, so they're doing us a favor, clamping down on the economy, and this is actually being done by design, many experts believe. What's your take on that?
Well, basically, I think that Mr. Obama is right to hire a lot of policemen, because if I were such a bad president, I would also need increasing protection. But in general, I think that his administration is a complete failure in terms of economic and foreign policies. Nothing has been addressed overseas. He has increased the engagement in Afghanistan, and I can assure you that Afghanistan is a country where nobody has an interest that the U.S. will win a conflict. Neither the Chinese, nor the Indians, nor the Pakistanis, nor the Russians, nor the mercenaries who are hired in Pakistan. So it will never end, and it will be a bottomless pit. And in terms of domestic policies, the healthcare reform is another disaster because it creates uncertainty. So let's assume you have a business. You employ 50 people. You don't know what your tax rate will be 3 years from now. You don't know what your healthcare bill will be 3 years from now. About the last thing you will do is hire people. So I think that the uncertainty he has created is very, very bad for the economy in the long run. In addition to that, as you just pointed out, he has piled up huge deficits. They're running now at an annual rate of, say, $1.5 trillion. The problem is that they will not go down. I think they will actually increase. And so the government debt increases. And one day this increased government debt will lead to substantially higher interest rates.
Well, Venezuela, as you know, last week devalued their currency by 50%. We have experienced a long slide in the value of a dollar, evidenced by a candy bar 20 years ago being a quarter, and now it's $1, or a beer being a quarter, and now it's $1.50 or $2. I mean, obviously, people know there's real inflation, but towards the end of a devaluation, it tends to accelerate. We're certainly seeing that right now. You know, there's temporary, as people do the reverse carry trade, for those that don't know, back into the United States. We saw a buoying for a time, as Dr. Paul Craig Roberts and other economists have predicted on the show in the fall of last year. But they say overall it is a downward sliding, slow death of the dollar, and that global interests have decided to go ahead and abandon the dollar. The only question is how to abandon it. What's your take on that, Dr. Faber?
Well, basically, there isn't really an international currency at the present to replace the dollar. And also, whereas I'm very critical of U.S. monetary and fiscal policies, I'm also critical of other countries' fiscal and monetary policies, because other countries are also very good at printing money. So I think the issue here is that all currencies lose their purchasing power over time. I mean, you just mentioned that the candy bar used to cost 25 cents and now it's $1 or whatever it is. The same has happened in Switzerland and in other countries around the world. But in this situation, there is essentially one currency that keeps its purchasing power. And these are precious metals, including gold, silver, platinum, palladium, because you can't increase the quantity. Mr. Bernanke has come out openly and said, if there was a deflationary threat, and I can explain you later on why deflation may not necessarily be bad, but if there is a deflationary threat, he said, then we can drop dollar bills onto the United States from helicopter. Well, that won't happen, but he can print electronically money, and as you increase the quantity of money, goods that are scarce appreciate against the diluted value of the dollar and other currencies around the world.
Now, Dr. Faber, looking at that, so you have all the major currencies of the world simultaneously engaging basically in the same big government footprint and huge deficits and thus devaluation of currencies. So it's happening simultaneously.
Yes, it's a coordinated debasement of paper money.
And that's what the G20 admits they're doing. Meanwhile, helicopter Ben Bernanke is delivering billion-dollar bills out of helicopters, but only directly into J.P. Morgan Chase, Goldman Sachs, and his own pocket. And so now there's open talk.
That is correct. It's so funny. I mean, it's actually tragic. It sounds funny, but it's tragic because it doesn't reach decent people in America. In fact, through monetary policies, they have impoverished normal people. And let me explain you why. First of all, when you cut down interest rates to zero, a lot of decent people, they accumulated savings in their lives. They have these savings on certificate of deposits in banks or on bank deposits. Now, even if you have $20 million on zero interest, you can't live. So if the interest was, say, 5% on $20 million, you would have income of $1 million. Secondly, commodity prices went up and peaked out in May 2006, and then they moved sideways, including oil, which was prior to the rate cuts in September 2007 at $75. At that time, the combined expenditures for oil in the United States were approximately $500 billion. But when Mr. Bernanke slashed interest rates to zero, oil went to $147, and the combined expenditures for oil in 2008 went to an annualized rate of $1 trillion. So the consumer, you and decent people in America, were saddened with another $500 billion in taxes. And the beneficiaries of that were the speculators largely on Wall Street.
Absolutely. So we have the real economy being fed into the speculators' gaping mouth.
You have a pie, and the pie has obviously through the recession become somewhat smaller. But what is now happening, the gangsters like Mr.